Question 1. Now, which option would solve a STEM about borrowing money from or lending money to a customer outside permitted firm rules? Option A. Improper lending arrangement. Option B. Normal margin debit. Option C. Dividend reinvestment. Option D. Dollar cost averaging. The correct answer is option A. Improper lending arrangement. Borrowing from or lending to customers is restricted and generally requires firm approval under specific exceptions. Normal margin debit is wrong because a margin debit is a regulated customer loan from the broker-dealer. Dividend reinvestment is wrong because dividend reinvestment uses payouts to buy shares. Dollar cost averaging is wrong because dollar cost averaging is an investing strategy. Question 2. From a test standpoint, which phrase identifies information that a reasonable investor would consider important and that has not been made public? Option A. Public rumor. Option B. Material non-public information. Option C. Historical price data. Option D. Generic market opinion. The correct answer is option B. Material non-public information. Material non-public information is important information that has not been broadly released to the public. Public rumor is wrong because a public rumor is not necessarily material or non-public. Historical price data is wrong because historical price data is publicly available. Generic market opinion is wrong because a generic opinion is not usually material non-public information. Question 3. Professionally, which label belongs to an insurance product with investment subaccounts and market risk? Option A. Fixed annuity. Option B. Treasury bill. Option C. Variable annuity. Option D. REIT. The correct answer is option C. Variable annuity. A variable annuity has separate account investments whose value fluctuates with market performance. Fixed annuity is wrong because a fixed annuity credits a guaranteed rate from the insurer's general account. Treasury bill is wrong because a treasury bill is short-term government debt. REIT is wrong because a REIT invests in real estate. Question 4. Certain questions point to sharing in a customer account's profits and losses without proper approval and proportional contribution. Which answer follows? Option A. Joint account with spouse under rules. Option B. Commission charge. Option C. Management fee. Option D. Improper account sharing. The correct answer is option D. Improper account sharing. Sharing in a customer account is restricted and generally requires firm approval and proportional sharing based on contribution. Joint account with spouse under rules is wrong because some joint arrangements may be permitted with approval. Commission charge is wrong because a commission is transaction compensation. Management fee is wrong because a management fee compensates advisory services. Question 5. Who is most closely associated with sharing material non-public information with another person who may trade on it? Option A. Tipping. Option B. Arbitrage. Option C. Hedging. Option D. Diversification. The correct answer is option A. Tipping. Tipping occurs when material non-public information is improperly passed to someone else. Arbitrage is wrong because arbitrage seeks to profit from price differences. Hedging is wrong because hedging attempts to reduce risk. Diversification is wrong because diversification spreads investment exposure. Question 6. Quickly, which response fits a sales charge paid when redeeming mutual fund shares? Option A. Front-end load. Option B. Back-end load. Option C. Breakpoint. Option D. NAV. The correct answer is option B. Back-end load. A back-end load is a deferred sales charge paid when shares are sold. Front-end load is wrong because a front-end load is paid when shares are purchased. Breakpoint is wrong because a breakpoint is a sales charge discount level. NAV is wrong because NAV is the fund's share value. Question 7. Risk questions using the disclosure document required before options trading approval usually identify which answer. Option A. Prospectus only. Option B. Indenture. Option C. Options disclosure document. Option D. Trade confirmation only. The correct answer is option C. Options disclosure document. Customers must receive the options disclosure document before being approved for options trading. Prospectus only is wrong because a prospectus applies to securities offerings and mutual funds. Indenture is wrong because an indenture is a bond contract. Trade confirmation only is wrong because a confirmation comes after a trade. Question 8. Considering investor protection, which term relates to a non-cash compensation limit commonly tested for business gifts? Option A. $10,000 per transaction. Option B. $5,000 per year. Option C. Unlimited if disclosed. Option D. $100 per person per year. The correct answer is option D. $100 per person per year. FINRA gift rules generally limit gifts related to business of the recipient's employer to $100 per person per year. $10,000 per transaction is wrong because that amount is associated with CTR currency reporting, not gifts. $5,000 per year is wrong because that is not the standard FINRA business gift limit. Unlimited if disclosed is wrong because disclosure alone does not make unlimited business gifts acceptable. Question 9. Second, which answer remains correct for raising long-term funds through stocks and bonds? Option A, capital market activity. Option B, money laundering. Option C, custody transfer. Option D, retail communication. The correct answer is option A, capital market activity. Capital markets help issuers raise long-term financing through equity and debt securities. Money laundering is wrong because money laundering hides the source of illegal funds. Custody transfer is wrong because custody transfer concerns safeguarding and movement of assets. Retail communication is wrong because retail communication is a public communication category. Question 10. Inside a securities account scenario, what matches the self-regulatory organization that oversees member broker-dealers? Option A, SEC. Option B, FINRA. Option C, FDIC. Option D, OCC. The correct answer is option B, FINRA. FINRA regulates member broker-dealers and administers qualification exams such as the SIE. SEC is wrong because the SEC is a federal regulator. FDIC is wrong because FDIC insures eligible bank deposits. OCC is wrong because OCC clears standardized listed options. Question 11. Within full practice test, which response is tied to the central bank tool of buying and selling government securities to influence money supply? Option A, prospectus delivery. Option B, trade reporting. Option C, open market operations. Option D, breakpoint sale. The correct answer is option C, open market operations. Open market operations are a Federal Reserve tool used to add or remove money from the banking system. Prospectus delivery is wrong because prospectus delivery is a securities offering disclosure requirement. Trade reporting is wrong because trade reporting reports completed trades. Breakpoint sale is wrong because a breakpoint sale concerns mutual fund sales charges. Question 12. One common prompt mentions an account owned by two people where the survivor receives the deceased owner's share. Which concept is right? Option A, tenants in common. Option B, custodial account. Option C, discretionary account. Option D, joint tenants with rights of survivorship. The correct answer is option D, joint tenants with rights of survivorship. JTROS means the surviving owner receives the deceased owner's interest. Tenants in common is wrong because TIC allows each owner's share to pass to their estate. Custodial account is wrong because a custodial account is for a minor under a custodian. Discretionary account is wrong because a discretionary account allows authorized trading discretion. Question 13. If the STEM says a major risk commonly associated with direct participation programs, which SIE concept is tested? Option A, illiquidity. Option B, FDIC insurance. Option C, guaranteed principal. Option D, daily NAV liquidity. The correct answer is option A, illiquidity. DPPs are often difficult to sell quickly and may have limited secondary markets. FDIC insurance is wrong because DPPs are not bank deposits. Guaranteed principal is wrong because DPP principal is not guaranteed. Daily NAV liquidity is wrong because daily redeemability is associated with open-end mutual funds. Question 14. Historically, exam prep connects recommending a mutual fund purchase just below a breakpoint to increase commission with which answer? Option A, dollar cost averaging. Option B, breakpoint sale. Option C, rights of accumulation. Option D, reinvestment privilege. The correct answer is option B, breakpoint sale. A breakpoint sale is improper because it denies the customer an available sales charge discount. Dollar cost averaging is wrong because dollar cost averaging is a legitimate investment strategy. Rights of accumulation is wrong because ROA helps customers receive discounts. Reinvestment privilege is wrong because a reinvestment privilege may allow reinvestment without a new sales charge. Question 15. Market examples using the risk that a bond issuer redeems a bond when rates fall usually test which concept? Option A, inflation risk. Option B, liquidity risk. Option C, call risk. Option D, currency risk. The correct answer is option C, call risk. Call risk is the risk that the issuer calls the bond and the investor must reinvest at lower rates. Inflation risk is wrong because inflation risk is loss of purchasing power. Liquidity risk is wrong because liquidity risk is difficulty selling at a fair price. Currency risk is wrong because currency risk comes from exchange rate changes. Question 16. Beyond memorization, which choice explains the form of firm files when terminating a registered representative? Option A, Form U4. Option B, Form 8K. Option C, Form ADV. Option D, Form U5. The correct answer is option D, Form U5. Form U5 is used to report termination of a registered person's registration. Form U4 is wrong because Form U4 is used for registration. Form 8K is wrong because Form 8K reports certain issuer events. Form ADV is wrong because Form ADV is used by investment advisors. Question 17. Often, which choice is linked to a security representing a loan from investors to an issuer? Option A, bond. Option B, common stock. Option C, call option. Option D, mutual fund. The correct answer is option A, bond. A bond is a debt security in which the issuer borrows money and promises interest and principal repayment. Common stock is wrong because common stock represents ownership. Call option is wrong because a call option gives a right to buy. Mutual fund is wrong because a mutual fund pools investor money. Question 18. For a full practice test drill, how should a candidate identify the date on which ownership changes and payment is due for a securities trade? Option A, trade date. Option B, settlement date. Option C, record date. Option D, declaration date. The correct answer is option B, settlement date. The settlement date is when the buyer pays and the seller delivers securities. Trade date is wrong because trade date is when the transaction is executed. Record date is wrong because record date identifies shareholders entitled to a dividend. Declaration date is wrong because declaration date is when the board declares a dividend. Question 19. In a licensing exam scenario, which choice reflects matching recommendations to a customer's profile, objectives, and risk tolerance? Option A, liquidity. Option B, arbitrage. Option C, suitability. Option D, dilution. The correct answer is option C, suitability. Suitability focuses on whether a recommendation fits the customer's investment profile. Liquidity is wrong because liquidity is the ease of converting an asset to cash. Arbitrage is wrong because arbitrage seeks to profit from price differences. Dilution is wrong because dilution reduces existing ownership percentage. Question 20. Every time verifying customer identity when opening an account appears, which choice should be considered? Option A, covered call writing. Option B, trade confirmation. Option C, breakpoint schedule. Option D, customer identification program. The correct answer is option D, customer identification program. A CIP requires firms to collect and verify identifying information for customers. Covered call writing is wrong because covered call writing is an option strategy. Trade confirmation is wrong because a confirmation reports the details of a completed trade. Breakpoint schedule is wrong because a breakpoint schedule lists mutual fund sales charge discounts. Question 21. After reading a customer scenario, which term covers non-qualified withdrawals from a 529 plan? Option A, tax and penalty consequences. Option B, always tax-free treatment. Option C, margin call. Option D, breakpoint discount. The correct answer is option A, tax and penalty consequences. Non-qualified 529 withdrawals may cause earnings to be taxed and penalized. Always tax-free treatment is wrong because tax-free treatment generally requires qualified education use. Margin call is wrong because a margin call relates to margin accounts. Breakpoint discount is wrong because a breakpoint discount applies to mutual fund sales charges. Question 22. Practically, which choice should be tied to the law mainly focused on new issue registration and disclosure? Option A, Securities Exchange Act of 1934. Option B, Securities Act of 1933. Option C, Investment Company Act of 1940. Option D, Trust Indenture Act of 1939. The correct answer is option B, Securities Act of 1933. The Securities Act of 1933 governs new issues and requires registration or an exemption. Securities Exchange Act of 1934 is wrong because the 1934 Act regulates secondary trading markets and created the SEC. Investment Company Act of 1940 is wrong because the 1940 Act regulates investment companies. Trust Indenture Act of 1939 is wrong because the Trust Indenture Act deals with certain corporate bond indentures. Question 23. This full practice test item asks about a corporate action that increases shares outstanding while reducing price proportionally. Which choice is accurate? Option A, cash dividend. Option B, bond call. Option C, stock split. Option D, rights offering. The correct answer is option C, stock split. A stock split changes the number of shares and price per share but does not by itself change total value. Cash dividend is wrong because a cash dividend distributes cash to shareholders. Bond call is wrong because a bond call redeems debt before maturity. Rights offering is wrong because a rights offering lets shareholders buy additional shares. Question 24. Concerning full practice test, which choice correctly matches automatic reinvestment of mutual fund dividends and capital gains? Option A, rights of accumulation. Option B, letter of intent. Option C, redemption fee. Option D, reinvestment privilege. The correct answer is option D, reinvestment privilege. A reinvestment privilege allows distributions to buy additional fund shares. Rights of accumulation is wrong because ROA uses existing purchases for breakpoint discounts. Letter of intent is wrong because LOI is a future purchase commitment. Redemption fee is wrong because a redemption fee is charged when selling shares. Question 25. Directly, which choice relates to executing trades near the close to artificially influence the closing price? Option A, marking the close. Option B, market on close order. Option C, rebalancing. Option D, accretion. The correct answer is option A, marking the close. Marking the close is manipulation aimed at affecting a security's closing price. Market on close order is wrong because a market on close order can be legitimate if not manipulative. Rebalancing is wrong because rebalancing adjusts portfolio allocations. Accretion is wrong because accretion adjusts a bond discount. Question 26. Fund questions using the first sale of a company's stock to the investing public usually point to which concept? Option A, secondary market trade. Option B, initial public offering. Option C, private placement. Option D, stock split. The correct answer is option B, initial public offering. An IPO is the first public sale of an issuer's stock. Secondary market trade is wrong because a secondary trade is between investors after the issue is outstanding. Private placement is wrong because a private placement is an unregistered offering to selected investors. Stock split is wrong because a stock split changes share count without being the first public sale. Question 27. Reading the stem carefully, which choice belongs with authority for another person to act on a customer's account? Option A, proxy. Option B, prospectus. Option C, power of attorney. Option D, trade confirmation. The correct answer is option C, power of attorney. A power of attorney grants another person authority to act for the account owner within stated limits. Proxy is wrong because a proxy authorizes voting of shares. Prospectus is wrong because a prospectus discloses offering information. Trade confirmation is wrong because a confirmation reports a completed trade. Question 28. Today, which SIE answer fits trading while aware of material non-public information? Option A, churning. Option B, selling away. Option C, breakpoint sale. Option D, insider trading. The correct answer is option D, insider trading. Insider trading involves using material non-public information to trade or tip others. Churning is wrong because churning is excessive trading for commissions. Selling away is wrong because selling away involves outside securities transactions without firm approval. Breakpoint sale is wrong because a breakpoint sale denies a mutual fund discount. Question 29. Under industry rules, which item is linked to a customer's written statement of intent to reach a breakpoint within a set period? Option A, letter of intent. Option B, rights of accumulation. Option C, proxy statement. Option D, hypothecation agreement. The correct answer is option A, letter of intent. A letter of intent lets a customer qualify for a breakpoint by committing to invest a stated amount over time. Rights of accumulation is wrong because ROA uses previous fund purchases to reach a breakpoint. Proxy statement is wrong because a proxy statement relates to shareholder voting. Hypothecation agreement is wrong because a hypothecation agreement permits securities to secure a margin loan. Question 30. Candidates often confuse terms, but which choice matches an order that becomes a limit order once the stop price is reached? Option A, stop order. Option B, stop limit order. Option C, market order. Option D, GTC order. The correct answer is option B, stop limit order. A stop limit order activates at the stop price and then can execute only at the limit price or better. Stop order is wrong because a stop order becomes a market order. Market order is wrong because a market order seeks immediate execution. GTC order is wrong because a GTC order concerns order duration. Question 31. Several SIE topics include prescribed continuing education focused on rules and regulatory responsibilities. Which choice is correct? Option A, firm element. Option B, sales element. Option C, regulatory element. Option D, disclosure element. The correct answer is option C, regulatory element. The regulatory element is structured training for registered persons on regulatory topics. Firm element is wrong because the firm element is firm-specific training. Sales element is wrong because sales element is not the standard C category. Disclosure element is wrong because disclosure element is not a FINRA C category. Question 32. Where would long-term instruments giving holders the right to buy stock at a set price fit in a securities industry question? Option A, REITs. Option B, puts. Option C, debentures. Option D, warrants. The correct answer is option D, warrants. Warrants give holders the right to buy shares at a specified price and often have longer lives than REITs. REITs is wrong because REITs are usually short-term privileges for existing shareholders. Puts is wrong because puts give the right to sell the underlying asset. Debentures is wrong because debentures are unsecured bonds. Question 33. Carefully, which option should match communications sent to 25 or fewer retail investors within a 30-day period? Option A, correspondence. Option B, retail communication. Option C, institutional communication. Option D, prospectus. The correct answer is option A, correspondence. Correspondence is a written or electronic communication sent to 25 or fewer retail investors within 30 days. Retail communication is wrong because retail communication goes to more than 25 retail investors. Institutional communication is wrong because institutional communication is limited to institutional investors. Prospectus is wrong because a prospectus is an offering disclosure document. Question 34. Rule questions using a pooled product that trades intraday on an exchange like a stock usually expect which choice? Option A, open-end mutual fund. Option B, ETF. Option C, ETN. Option D, variable annuity. The correct answer is option B, ETF. An ETF generally tracks a basket or index and trades intraday on an exchange. Open-end mutual fund is wrong because an open-end mutual fund is bought and redeemed at NAV after market close. ETN is wrong because an ETN is an unsecured debt note linked to an index. Variable annuity is wrong because a variable annuity is an insurance product with investment subaccounts. Question 35. Following FINRA-style wording, which answer describes selling borrowed shares with the intention of buying them back later? Option A, long purchase. Option B, covered call. Option C, short sale. Option D, rights offering. The correct answer is option C, short sale. A short sale involves selling borrowed shares and later purchasing shares to return them. Long purchase is wrong because a long purchase buys shares for ownership. Covered call is wrong because a covered call sells a call against owned stock. Rights offering is wrong because a rights offering lets shareholders buy new shares. Question 36. First, which term should a candidate recall for a tax-advantaged plan used to save for qualified education expenses? Option A, 401k plan. Option B, IRA. Option C, HSA. Option D, 529 plan. The correct answer is option D, 529 plan. A 529 plan is designed to help pay qualified education expenses with potential tax advantages. 401k plan is wrong because a 401k is an employer retirement plan. IRA is wrong because an IRA is an individual retirement account. HSA is wrong because an HSA is used for qualified medical expenses. Question 37. On a full practice test question, which concept points to the law that primarily regulates mutual funds and other investment companies? Option A, Investment Company Act of 1940. Option B, Securities Act of 1933. Option C, Securities Exchange Act of 1934. Option D, Bank Secrecy Act. The correct answer is option A, Investment Company Act of 1940. The Investment Company Act of 1940 regulates investment companies such as mutual funds. Securities Act of 1933 is wrong because the 1933 Act focuses on new offerings. Securities Exchange Act of 1934 is wrong because the 1934 Act regulates secondary markets. Bank Secrecy Act is wrong because the Bank Secrecy Act supports anti-money laundering controls. Question 38. Besides similar choices, which answer accurately names company-specific risk that diversification can reduce? Option A, systematic risk. Option B, unsystematic risk. Option C, inflation risk. Option D, interest rate risk. The correct answer is option B, unsystematic risk. Unsystematic risk is specific to a company or industry and can be reduced by diversification. Systematic risk is wrong because systematic risk affects the broad market. Inflation risk is wrong because inflation risk erodes purchasing power. Interest rate risk is wrong because interest rate risk relates to changing rates. Question 39. Many review questions describe a short-term corporate debt instrument usually issued at a discount. Which answer fits? Option A, Treasury bond. Option B, common stock. Option C, commercial paper. Option D, municipal revenue bond. The correct answer is option C, commercial paper. Commercial paper is short-term unsecured corporate debt often used for working capital. Treasury bond is wrong because a treasury bond is long-term U.S. government debt. Common stock is wrong because common stock is equity ownership. Municipal revenue bond is wrong because a revenue bond is municipal debt backed by revenues. Question 40. Imagine a firm dealing with a capital loss strategy that replaces a security too quickly with substantially identical shares. Which label applies? Option A, wash trade. Option B, short sale. Option C, stop order. Option D, wash sale. The correct answer is option D, wash sale. A wash sale can disallow a tax loss if substantially identical securities are purchased within the restricted window. Wash trade is wrong because a wash trade is manipulative trading to create false volume. Short sale is wrong because a short sale sells borrowed shares. Stop order is wrong because a stop order triggers at a stop price. Question 41. Ethically, which concept is triggered by a security backed by a pool of residential mortgages? Option A, mortgage-backed security. Option B, municipal bond. Option C, corporate debenture. Option D, common stock. The correct answer is option A, mortgage-backed security. A mortgage-backed security represents an interest in a pool of mortgage loans. Municipal bond is wrong because a municipal bond is issued by a state or local government. Corporate debenture is wrong because a debenture is unsecured corporate debt. Common stock is wrong because common stock represents ownership. Question 42. Those details suggest a fund's annual operating expenses as a percentage of assets. Which response is best? Option A, sales load. Option B, expense ratio. Option C, breakpoint. Option D, bid-ask spread. The correct answer is option B, expense ratio. The expense ratio shows annual fund operating expenses relative to fund assets. Sales load is wrong because a sales load is a sales charge. Breakpoint is wrong because a breakpoint is a sales charge discount level. Bid-ask spread is wrong because a bid-ask spread is dealer price difference. Question 43. Near the start of a question, a firm registration category required for securities firms doing brokerage business should lead to which answer? Option A, investment company registration. Option B, issuer exemption only. Option C, broker-dealer registration. Option D, bank deposit registration. The correct answer is option C, broker-dealer registration. Broker-dealer registration is required for firms engaged in securities transactions as a broker or dealer. Investment company registration is wrong because investment company registration applies to funds. Issuer exemption only is wrong because an issuer exemption does not cover a firm doing brokerage business. Bank deposit registration is wrong because bank deposits are not registered as broker-dealer business. Question 44. Typically, which term appears with a customer instruction to deliver securities against payment? Option A, RVP. Option B, AON. Option C, GTC. Option D, DVP. The correct answer is option D, DVP. Delivery versus payment means securities are delivered when payment is made. RVP is wrong because receive versus payment is the receiving side instruction. AON is wrong because all or none is an order qualifier. GTC is wrong because good till cancelled is an order duration. Question 45. During a full practice test review, which term matches exercising discretion over price or time only for the day without written discretion? Option A, time and price discretion. Option B, full discretion. Option C, unauthorized trading. Option D, churning. The correct answer is option A, time and price discretion. A representative may use time and price discretion for the day if the customer gave those instructions. Full discretion is wrong because full discretion over asset or amount requires written authorization. Unauthorized trading is wrong because unauthorized trading lacks customer approval. Churning is wrong because churning is excessive trading. Question 46. For a quick SIE checkpoint, which answer means a periodic report showing holdings, activity, and balances? Option A, trade ticket. Option B, account statement. Option C, prospectus. Option D, indenture. The correct answer is option B, account statement. An account statement summarizes positions, transactions, and balances for a customer account. Trade ticket is wrong because a trade ticket records order details internally. Prospectus is wrong because a prospectus discloses offering details. Indenture is wrong because an indenture is a bond contract. Question 47. There, which term would identify improperly allocating hot IPO shares to executives to win business? Option A, churning. Option B, spoofing. Option C, spinning. Option D, structuring. The correct answer is option C, spinning. Spinning is the improper allocation of new issue shares to gain investment banking business. Churning is wrong because churning is excessive trading. Spoofing is wrong because spoofing uses deceptive orders. Structuring is wrong because structuring evades cash reporting. Question 48. While reviewing full practice test, which answer explains checking that shares can be borrowed before accepting a short sale order? Option A, prospectus delivery. Option B, breakpoint lookup. Option C, proxy solicitation. Option D, locate requirement. The correct answer is option D, locate requirement. The locate requirement helps ensure shares can be borrowed before a short sale is executed. Prospectus delivery is wrong because prospectus delivery applies to offering disclosures. Breakpoint lookup is wrong because breakpoint lookup checks mutual fund sales charge discounts. Proxy solicitation is wrong because proxy solicitation seeks voting authority. Question 49. Operationally, which term applies to the party who controls a 529 account and can change beneficiaries under plan rules? Option A, account owner. Option B, beneficiary. Option C, underwriter. Option D, trustee only. The correct answer is option A, account owner. The account owner controls the 529 plan account and may change beneficiaries if plan rules permit. Beneficiary is wrong because the beneficiary is the student for whom the account is intended. Underwriter is wrong because an underwriter distributes new issues. Trustee only is wrong because a trustee may oversee assets, but is not the standard 529 account owner term. Question 50. Few distractors beat the clue the law that regulates people paid to provide securities advice. Which answer is correct? Option A, Securities Act of 1933. Option B, Investment Advisors Act of 1940. Option C, Securities Exchange Act of 1934. Option D, Trust Indenture Act. The correct answer is option B, Investment Advisors Act of 1940. The Investment Advisors Act of 1940 regulates investment advisors that provide advice for compensation. Securities Act of 1933 is wrong because the 1933 Act governs new issues. Securities Exchange Act of 1934 is wrong because the 1934 Act governs trading markets and broker-dealers. Trust Indenture Act is wrong because the Trust Indenture Act concerns corporate bond indentures. Question 51. Regarding full practice test, which answer best defines the penalty tax commonly associated with early IRA withdrawals before age 59 1/2? Option A, 50% margin call. Option B, $100 gift limit. Option C, 10% penalty. Option D, $10,000 CTR threshold. The correct answer is option C, 10% penalty. Early IRA withdrawals before age 59 1/2 may be subject to a 10% additional tax unless an exception applies. 50% margin call is wrong because 50% is the Regulation T initial margin requirement. $100 gift limit is wrong because the $100 limit relates to FINRA gifts. $10,000 CTR threshold is wrong because the CTR threshold relates to cash reporting. Question 52. Correctly, which answer names a firm that executes securities transactions for customers or trades for its own account? Option A, investment advisor. Option B, transfer agent. Option C, custodian bank. Option D, broker-dealer. The correct answer is option D, broker-dealer. A broker-dealer may act as a broker for customers and as a dealer for its own inventory. Investment advisor is wrong because an investment advisor gives advice for compensation and is not primarily executing trades. Transfer agent is wrong because a transfer agent maintains ownership records and processes transfers. Custodian bank is wrong because a custodian holds assets but is not the executing securities firm. Question 53. Bond questions using the risk that changing rates reduce the market value of a bond usually ask for which answer? Option A, interest rate risk. Option B, credit risk. Option C, political risk. Option D, business risk. The correct answer is option A, interest rate risk. Interest rate risk is the risk that bond prices fall when market rates rise. Credit risk is wrong because credit risk is default risk. Political risk is wrong because political risk involves government or geopolitical events. Business risk is wrong because business risk concerns a company's operations. Question 54. Reviewing market structure, which item describes the risk that income or principal must be reinvested at lower rates? Option A, call risk only. Option B, reinvestment risk. Option C, liquidity risk. Option D, systematic risk. The correct answer is option B, reinvestment risk. Reinvestment risk arises when cash flows are reinvested at less favorable rates. Call risk only is wrong because call risk can create reinvestment risk, but is not the general term for all reinvestment problems. Liquidity risk is wrong because liquidity risk is difficulty selling. Systematic risk is wrong because systematic risk affects the broad market. Question 55. Finally, which term completes the idea of the system that automatically matches buy and sell orders electronically? Option A, transfer agent. Option B, clearing corporation. Option C, electronic communication network. Option D, rating agency. The correct answer is option C, electronic communication network. An ECN electronically matches buy and sell orders and can improve execution access. Transfer agent is wrong because a transfer agent records ownership changes. Clearing corporation is wrong because a clearing corporation compares and settles trades. Rating agency is wrong because a rating agency evaluates credit risk. Question 56. An SIE-style item describes basic identifying information collected when opening a customer account. Which response fits? Option A, NAV information. Option B, yield information. Option C, proxy information. Option D, CIP information. The correct answer is option D, CIP information. CIP information helps verify a customer's identity at account opening. NAV information is wrong because NAV is used for mutual fund pricing. Yield information is wrong because yield measures investment income return. Proxy information is wrong because proxy information relates to shareholder voting. Question 57. Test writers may describe the regular way settlement cycle for most U.S. stock trades after the T+1 move. Which answer should you recognize? Option A, T+1. Option B, T+3. Option C, same day always. Option D, T+5. The correct answer is option A, T+1. Regular way settlement for most U.S. stock trades is 1 business day after trade date. T+3 is wrong because T+3 was an older settlement cycle. Same day always is wrong because same day settlement is not the standard for most stock trades. T+5 is wrong because T+5 is not the regular way cycle. Question 58. Each practice set may test an order that becomes a market order once a stop price is reached. Which term applies? Option A, limit order. Option B, stop order. Option C, stop limit order. Option D, market on close order. The correct answer is option B, stop order. A stop order is triggered at the stop price and then becomes a market order. Limit order is wrong because a limit order executes only at the limit price or better. Stop limit order is wrong because a stop limit becomes a limit order after activation. Market on close order is wrong because a market on close order executes near the close. Question 59. How does the exam classify the Federal Reserve rule governing initial margin for securities purchases? Option A, Regulation by. Option B, Rule 144. Option C, Regulation T. Option D, Regulation D. The correct answer is option C, Regulation T. Regulation T sets the initial margin requirement for many securities purchases. Regulation by is wrong because Reg by governs broker-dealer recommendations. Rule 144 is wrong because Rule 144 concerns resales of restricted and control securities. Regulation D is wrong because Regulation D provides private placement exemptions. Question 60. Strategically, which answer helps solve a clue about a joint account where each owner's share passes to that owner's estate? Option A, JTROs. Option B, TOD account. Option C, margin account. Option D, tenants in common. The correct answer is option D, tenants in common. In a TIC account, each owner's interest passes according to that owner's estate instructions. JTROs is wrong because JTROs passes ownership to the surviving joint owner. TOD account is wrong because a TOD account names beneficiaries for transfer at death. Margin account is wrong because a margin account allows borrowing against securities. Question 61. Account questions using guaranteeing a customer against investment loss usually test which term? Option A, prohibited guarantee. Option B, explaining risk. Option C, diversifying a portfolio. Option D, providing a prospectus. The correct answer is option A, prohibited guarantee. Representatives generally may not guarantee customers against losses in securities accounts. Explaining risk is wrong because explaining risk is required and appropriate. Diversifying a portfolio is wrong because diversification may reduce risk but does not guarantee against loss. Providing a prospectus is wrong because providing required disclosure is appropriate. Question 62. Based on securities rules, which response matches dealer compensation deducted when buying from a customer into inventory? Option A, markup. Option B, markdown. Option C, commission. Option D, load. The correct answer is option B, markdown. A markdown is the dealer's compensation when buying from a customer as principal. Markup is wrong because a markup is added when selling to a customer. Commission is wrong because a commission is agency compensation. Load is wrong because a load is a mutual fund sales charge. Question 63. Rarely should this be missed. Which option matches risk that affects the entire market and cannot be diversified away? Option A, unsystematic risk. Option B, liquidity risk. Option C, systematic risk. Option D, call risk. The correct answer is option C, systematic risk. Systematic risk affects the overall market and cannot be eliminated through diversification. Unsystematic risk is wrong because unsystematic risk is company-specific and can be reduced through diversification. Liquidity risk is wrong because liquidity risk is difficulty selling. Call risk is wrong because call risk applies to callable securities. Question 64. When an exam stem mentions compensation charged by a broker acting as agent, which answer is best? Option A, markup. Option B, markdown. Option C, dividend. Option D, commission. The correct answer is option D, commission. A commission is charged when the firm acts as agent for the customer. Markup is wrong because a markup is added when a dealer sells from inventory. Markdown is wrong because a markdown is taken when a dealer buys into inventory. Dividend is wrong because a dividend is an issue or distribution to shareholders. Question 65. Among common SIE traps, which term is connected to a pooled investment that passes income, gains, losses, and deductions to investors? Option A, direct participation program. Option B, open-end fund. Option C, treasury bill. Option D, common stock. The correct answer is option A, direct participation program. A DPP passes through tax results to investors and is often illiquid and suitable only for specific investors. Open-end fund is wrong because an open-end fund issues redeemable shares at NAV. Treasury bill is wrong because a treasury bill is short-term government debt. Common stock is wrong because common stock is corporate equity. Question 66. Some candidates miss spreading false positive claims to raise a stock price before selling. Which choice fixes the mistake? Option A, covered call. Option B, pump and dump. Option C, buy and hold. Option D, rights offering. The correct answer is option B, pump and dump. A pump and dump scheme promotes false or misleading information to inflate price before selling. Covered call is wrong because a covered call is an options income strategy. Buy and hold is wrong because buy and hold is a long-term investment approach. Rights offering is wrong because a rights offering lets shareholders buy additional shares. Question 67. Suppose a question asks about an option giving the holder the right to sell the underlying security. Which option is strongest? Option A, call option. Option B, right. Option C, put option. Option D, debenture. The correct answer is option C, put option. A put option gives the holder the right, not the obligation, to sell the underlying security. Call option is wrong because a call gives the right to buy. Right is wrong because a right lets shareholders buy new shares. Debenture is wrong because a debenture is unsecured debt. Question 68. Financially, which term is associated with a retirement account that may allow deductible contributions and taxable distributions? Option A, Roth IRA. Option B, 529 plan. Option C, UGMA account. Option D, traditional IRA. The correct answer is option D, traditional IRA. A traditional IRA may allow tax-deductible contributions and generally taxes distributions as ordinary income. Roth IRA is wrong because a Roth IRA uses after-tax contributions and can provide qualified tax-free withdrawals. 529 plan is wrong because a 529 plan targets education expenses. UGMA account is wrong because UGMA is a custodial account for a minor. Question 69. These facts describe authority allowing a representative to choose the asset, amount, or timing of trades. Which term is tested? Option A, discretionary authority. Option B, limited trading authorization only. Option C, margin approval. Option D, cash settlement. The correct answer is option A, discretionary authority. Discretionary authority permits someone other than the customer to make investment decisions in the account. Limited trading authorization only is wrong because limited authorization may permit placing orders but not full discretion unless granted. Margin approval is wrong because margin approval allows borrowing, not investment discretion. Cash settlement is wrong because cash settlement describes paying for trades in cash. Question 70. Across SIE topics, what is the best match for the phase when an annuity begins making income payments? Option A, accumulation phase. Option B, annuitization phase. Option C, underwriting phase. Option D, settlement cycle. The correct answer is option B, annuitization phase. The annuitization phase begins when the contract is converted into a stream of payments. Accumulation phase is wrong because accumulation is when contributions are made. Underwriting phase is wrong because underwriting relates to issuing securities or insurance evaluation. Settlement cycle is wrong because settlement cycle relates to securities trades. Question 71. Usually, which answer is tested by an order that remains active until executed or cancelled? Option A, day order. Option B, IOC order. Option C, good till cancelled order. Option D, AON order. The correct answer is option C, good till cancelled order. A GTC order remains open until it is executed, cancelled, or expires under firm rules. Day order is wrong because a day order expires at the end of the trading day. IOC order is wrong because an IOC order executes immediately in whole or part and cancels the rest. AON order is wrong because an AON order requires complete execution. Question 72. Options questions using buying a put while owning the underlying stock usually match which answer? Option A, covered call. Option B, short straddle. Option C, debit spread only. Option D, protective put. The correct answer is option D, protective put. A protective put gives downside protection by allowing the investor to sell at the strike price. Covered call is wrong because a covered call sells a call against owned stock. Short straddle is wrong because a short straddle sells a call and put. Debit spread only is wrong because a debit spread involves buying and selling options at different strikes or expirations. Question 73. Without overthinking it, which answer identifies the federal agency that administers major federal securities laws? Option A, SEC. Option B, FINRA. Option C, MSRB. Option D, Federal Reserve. The correct answer is option A, SEC. The SEC administers federal securities laws and oversees the securities markets. FINRA is wrong because FINRA is an SRO that regulates member broker-dealers. MSRB is wrong because MSRB writes municipal securities rules. Federal Reserve is wrong because the Federal Reserve manages monetary policy and banking functions. Question 74. Here, which answer belongs with an unsecured debt obligation linked to the performance of an index or benchmark? Option A, ETF. Option B, ETN. Option C, mutual fund. Option D, municipal bond. The correct answer is option B, ETN. An ETN is unsecured debt of an issuer, so it carries issuer credit risk as well as market risk. ETF is wrong because an ETF represents shares of a pooled fund, not issuer debt. Mutual fund is wrong because a mutual fund issues redeemable shares. Municipal bond is wrong because a municipal bond is debt of a state or local issuer. Question 75. Before choosing an answer, which concept describes a bank-guaranteed time draft often used in international trade? Option A, ADR. Option B, debenture. Option C, banker's acceptance. Option D, covered call. The correct answer is option C, banker's acceptance. A banker's acceptance is a short-term money market instrument backed by a bank. ADR is wrong because an ADR represents foreign equity shares. Debenture is wrong because a debenture is unsecured corporate debt. Covered call is wrong because a covered call is an option strategy. Question 76. Legally, which answer is closest to moving a customer account from one broker-dealer to another through an automated system? Option A, CTR filing. Option B, SIPC liquidation only. Option C, Rule 144 transfer. Option D, ACITS transfer. The correct answer is option D, ACITS transfer. ACITS is used to transfer customer accounts between broker-dealers. CTR filing is wrong because CTR reporting concerns large cash transactions. SIPC liquidation only is wrong because SIPC liquidation applies when a broker-dealer fails. Rule 144 transfer is wrong because Rule 144 concerns resales of restricted and control securities. Question 77. Most learners should recognize the firm responsible for carrying customer accounts and holding assets as which concept? Option A, carrying firm. Option B, introducing firm. Option C, issuer. Option D, rating agency. The correct answer is option A, carrying firm. A carrying firm maintains customer accounts and custody of assets for an introducing firm. Introducing firm is wrong because an introducing firm services the customer but does not carry the account. Issuer is wrong because an issuer sells securities to raise capital. Rating agency is wrong because a rating agency evaluates credit quality. Question 78. Because the clue says an equity security with fixed dividends and priority over common stock, which choice is most accurate? Option A, common stock. Option B, preferred stock. Option C, convertible bond only. Option D, money market fund. The correct answer is option B, preferred stock. Preferred stock usually pays a fixed dividend and has priority over common stock for dividends and liquidation. Common stock is wrong because common stock usually has voting rights and lower priority. Convertible bond only is wrong because a convertible bond is debt that may convert into stock. Money market fund is wrong because a money market fund invests in short-term instruments. Question 79. Accurately, which term defines a document allowing another person to vote shares for a shareholder? Option A, prospectus. Option B, indenture. Option C, proxy. Option D, trade confirmation. The correct answer is option C, proxy. A proxy authorizes another party to vote shares on behalf of a shareholder. Prospectus is wrong because a prospectus discloses information about a securities offering. Indenture is wrong because an indenture is a bond contract. Trade confirmation is wrong because a confirmation reports trade details. Question 80. Order questions using screening customers against sanctions lists usually mean which term? Option A, SIPC check. Option B, breakpoint check. Option C, suitability check only. Option D, OFAC check. The correct answer is option D, OFAC check. OFAC checks help prevent firms from doing business with sanctioned persons or entities. SIPC check is wrong because SIPC protection is not a sanctioned screening process. Breakpoint check is wrong because breakpoint checks relate to mutual fund sales charge discounts. Suitability check only is wrong because suitability checks investment fit, not sanctioned status. Question 81. Looking at product risk, which answer fits the law that regulates secondary market trading and created the SEC? Option A, Securities Exchange Act of 1934. Option B, Securities Act of 1933. Option C, Investment Advisors Act of 1940. Option D, Securities Investor Protection Act. The correct answer is option A, Securities Exchange Act of 1934. The Securities Exchange Act of 1934 regulates secondary trading and established the SEC. Securities Act of 1933 is wrong because the 1933 Act focuses on new issue registration. Investment Advisors Act of 1940 is wrong because the Advisors Act regulates investment advisors. Securities Investor Protection Act is wrong because SIPA created SIPC protection for brokerage customers. Question 82. Next, which choice best handles the clearing agency that issues and guarantees listed options contracts? Option A, FDIC. Option B, OCC. Option C, SIPC. Option D, MSRB. The correct answer is option B, OCC. The Options Clearing Corporation issues and guarantees standardized listed options. FDIC is wrong because FDIC insures eligible bank deposits. SIPC is wrong because SIPC protects brokerage customers if a firm fails. MSRB is wrong because MSRB writes municipal securities rules. Question 83. A new representative sees an option giving the holder the right to buy the underlying security. Which term should stand out? Option A, put option. Option B, warrant only. Option C, call option. Option D, short sale. The correct answer is option C, call option. A call option gives the holder the right, not the obligation, to buy the underlying security. Put option is wrong because a put gives the holder the right to sell. Warrant only is wrong because a warrant is a longer-term issuer-created purchase right. Short sale is wrong because a short sale is selling borrowed securities. Question 84. Outside of pure memorization, which item explains acting as principal and selling securities from the firm's own inventory? Option A, broker capacity. Option B, transfer capacity. Option C, advisory capacity. Option D, dealer capacity. The correct answer is option D, dealer capacity. A dealer acts as principal by buying or selling from its own account and earning a markup or markdown. Broker capacity is wrong because a broker acts as agent for a customer and charges commission. Transfer capacity is wrong because a transfer agent updates ownership records. Advisory capacity is wrong because an advisor gives investment advice for compensation. Question 85. Another exam angle asks about a key risk of an exchange-traded note beyond market risk. Which answer works? Option A, issuer credit risk. Option B, voting risk. Option C, breakpoint risk. Option D, prepayment risk only. The correct answer is option A, issuer credit risk. Because an ETN is unsecured debt, the investor faces the issuer's credit risk. Voting risk is wrong because ETNs do not provide common stock voting rights. Breakpoint risk is wrong because breakpoints apply to mutual fund sales charges. Prepayment risk only is wrong because prepayment risk is more associated with mortgage-backed securities. Question 86. Why would a candidate connect preferred shares that can be exchanged for common stock with one answer? Option A, cumulative preferred. Option B, convertible preferred. Option C, callable preferred. Option D, non-voting common. The correct answer is option B, convertible preferred. Convertible preferred gives the holder the right to convert into common shares under stated terms. Cumulative preferred is wrong because cumulative preferred accumulates missed dividends. Callable preferred is wrong because callable preferred may be redeemed by the issuer. Non-voting common is wrong because non-voting common is common equity without voting rights. Question 87. Technically, which choice identifies an order to sell that is placed below the current market price? Option A, sell limit order. Option B, buy stop order. Option C, sell stop order. Option D, buy limit order. The correct answer is option C, sell stop order. A sell stop order is placed below the market and activates when the price falls to the stop price. Sell limit order is wrong because a sell limit is placed above the market. Buy stop order is wrong because a buy stop is placed above the market. Buy limit order is wrong because a buy limit is placed below the market. Question 88. Product questions using a lower priority unsecured corporate bond usually point to which answer? Option A, secured bond. Option B, treasury bond. Option C, cumulative preferred. Option D, subordinated debenture. The correct answer is option D, subordinated debenture. A subordinated debenture is unsecured and ranks below senior debt in claims priority. Secured bond is wrong because a secured bond has specific collateral. Treasury bond is wrong because a treasury bond is backed by the U.S. government. Cumulative preferred is wrong because cumulative preferred is equity, not debt. Question 89. Using exam logic, which option aligns with communications sent to more than 25 retail investors within a 30-day period? Option A, retail communication. Option B, correspondence. Option C, institutional communication. Option D, internal memorandum. The correct answer is option A, retail communication. Retail communication is a communication distributed to more than 25 retail investors within a 30-day period. Correspondence is wrong because correspondence is sent to 25 or fewer retail investors within 30 days. Institutional communication is wrong because institutional communication is sent only to institutional investors. Internal memorandum is wrong because an internal memorandum is not a public communication category. Question 90. At a broker-dealer, which choice fits total fund assets minus liabilities divided by shares outstanding? Option A, public offering price. Option B, net asset value. Option C, current yield. Option D, ask spread. The correct answer is option B, net asset value. NAV is calculated by subtracting liabilities from assets and dividing by shares outstanding. Public offering price is wrong because POP includes any applicable sales charge. Current yield is wrong because current yield compares income to price. Ask spread is wrong because ask spread is not the mutual fund pricing formula. Question 91. Under a customer first analysis, which concept matches a beneficiary designation that transfers assets after death without changing ownership during life? Option A, JTROs. Option B, TIC. Option C, transfer on death registration. Option D, power of attorney. The correct answer is option C, transfer on death registration. Todd registration names beneficiaries to receive account assets after the owner dies. JTROS is wrong because JTROS gives current joint ownership with survivorship. TIC is wrong because TIC creates separate ownership shares. Power of attorney is wrong because power of attorney authorizes someone to act during life. Question 92. Anyone studying full practice test should connect short-term instruments allowing existing shareholders to buy shares at a set price with which answer? Option A, warrants. Option B, calls. Option C, preferred shares. Option D, rights. The correct answer is option D, rights. Rights are short-term privileges often offered to existing shareholders in a rights offering. Warrants is wrong because warrants are generally longer-term purchase rights. Calls is wrong because calls are standardized options contracts. Preferred shares is wrong because preferred shares are equity securities with priority dividend features. Question 93. Given the clue dealer compensation added when selling from inventory to a customer, which answer should be selected? Option A, markup. Option B, commission. Option C, markdown. Option D, expense ratio. The correct answer is option A, markup. A markup is the amount added above the dealer's cost when selling as principal. Commission is wrong because a commission is charged in an agency transaction. Markdown is wrong because a markdown is taken when buying from a customer as principal. Expense ratio is wrong because an expense ratio measures fund operating costs. Question 94. Conceptually, which answer describes a bond strategy concentrating maturities around a single target date? Option A, ladder strategy. Option B, bullet strategy. Option C, barbell strategy. Option D, stop limit strategy. The correct answer is option B, bullet strategy. A bullet strategy concentrates bond maturities around a specific date to match a future cash need. Ladder strategy is wrong because a ladder staggers maturities. Barbell strategy is wrong because a barbell uses short and long maturities. Stop limit strategy is wrong because stop limit is an order type. Question 95. That clue, a retirement account funded with after-tax contributions and qualified tax-free withdrawals, points to which answer? Option A, traditional IRA. Option B, 529 plan. Option C, Roth IRA. Option D, HSA. The correct answer is option C, Roth IRA. A Roth IRA is funded with after-tax money and may allow qualified tax-free distributions. Traditional IRA is wrong because a traditional IRA may provide deductible contributions but taxable distributions. 529 plan is wrong because a 529 plan is for education expenses. HSA is wrong because an HSA is for qualified medical expenses. Question 96. Through a customer account lens, which term means the process that compares trade details before settlement? Option A, prospecting. Option B, underwriting. Option C, annuitization. Option D, clearing. The correct answer is option D, clearing. Clearing compares and prepares trade obligations before final settlement. Prospecting is wrong because prospecting seeks potential customers. Underwriting is wrong because underwriting distributes new issues. Annuitization is wrong because annuitization starts annuity income payments. Question 97. Precisely which option explains a bond feature allowing the holder to force the issuer to redeem the bond? Option A, put provision. Option B, call provision. Option C, preemptive right. Option D, stop order. The correct answer is option A, put provision. A put provision gives the bondholder the right to require redemption under stated terms. Call provision is wrong because a call provision benefits the issuer by allowing early redemption. Preemptive right is wrong because a preemptive right helps shareholders maintain ownership percentage. Stop order is wrong because a stop order becomes active when a stop price is reached. Question 98. Equity questions using protection that applies when a broker-dealer fails but not when investments lose market value usually test which term? Option A, FDIC insurance. Option B, SIPC protection. Option C, Reg BI protection. Option D, Blue Sky insurance. The correct answer is option B, SIPC protection. SIPC protects customer assets if a broker-dealer fails financially, but it does not insure against market losses. FDIC insurance is wrong because FDIC insurance protects eligible bank deposits. Reg BI protection is wrong because Reg BI sets conduct standards for recommendations. Blue Sky insurance is wrong because Blue Sky laws are state securities laws, not insurance. Question 99. Compared with the distractors, which term best fits short-term debt instruments with maturities generally 1 year or less? Option A, capital market securities. Option B, derivative securities only. Option C, money market instruments. Option D, equity securities only. The correct answer is option C, money market instruments. Money market instruments are short-term debt obligations used for liquidity and short-term financing. Capital market securities is wrong because capital market securities are longer-term instruments. Derivative securities only is wrong because derivatives derive value from an underlying asset. Equity securities only is wrong because equity securities represent ownership. Question 100. Now, which option would solve a STEM about work outside the firm that may require notice because it involves compensation or business activity? Option A, Regulation T. Option B, CIP. Option C, NAV. Option D, outside business activity. The correct answer is option D, outside business activity. An outside business activity may require notice to the firm so conflicts and supervision issues can be reviewed. Regulation T is wrong because Regulation T sets initial margin requirements. CIP is wrong because CIP verifies customer identity. NAV is wrong because NAV prices mutual fund shares.